Coming up in this week's episode, we're going to be taking a look at the latest lender rate changes, the latest lender criteria changes, and the latest swap rate chart. We'll also be taking a look at the Household Finance Review report, the Halifax House Price Index, and of course, last but certainly not least, the budget and what that means for the UK property market. Hello everybody, it's Craig here with your UK mortgage market insights for the weekend in the 8th of March 2024. I hope I find you all well. There's a lot to cover in this week's episode, so let's get straight on with it. So first up this week, let's take a look at those lenders that have changed rates this week, whether they be up or down, and believe me, the majority of them have been up. So first of all, we've got the Bank of Ireland. They've been increasing some rates. NatWest have increased their existing customer rates by up to 10 basis points. Clydesdale have increased some of their rates by up to 0.65% for residential products. They've made some very minute reductions on some of their buy-to-let products. Hodge have increased most of their rates by up to 0.3%. HSBC have increased all of their rates. Virgin, purchase, remortgage, and large loan and buy-to-let rates are all increasing. BM Solutions are making some rate increases across the range, but their product transfers for existing customers are remaining unchanged. Leeds Building Society have increased selected rates, and so have Accord by up to 0.3%. Barclays have made some increases and some slight decreases. Kensington are making rate reductions on selected products by up to 0.55%, and Generation Home are reducing some of their products by a very minute 7 basis points. One thing I do want to point out though is that if you're in discussions with a broker about a mortgage and they say to you, please make your decision as quickly as possible because rates can be withdrawn with little or no notice, they really do mean it. It's not some sort of marketing ploy. They're concerned that the rates could be withdrawn and increased because that's the direction that most lenders are changing their rates in at the moment. Some lenders will send an email to brokers at say 2 o'clock or 4 o'clock on a Friday afternoon saying that you've got until 8 o'clock tonight to get applications submitted. That's really not very fair. It's not in line with consumer duty, which is something that brokers have to adhere to. And ultimately, the person that loses out is you, the consumer. So please, if you are looking at a mortgage right now and a broker is saying to you, we do need you to make a decision rather quickly, it isn't a marketing ploy. It genuinely is because they want you to get the best product available to you right now. Next, I'd like to take a quick look at the lender criteria changes that have taken place this week. There have been a few more than this, but these are the key ones that stood out to me, so I just wanted to point those out. So Nottingham, they've increased their maximum loan to value for residential non-new build flat, now lending up to 90%. And they've also introduced a no limit on the number of stories for flats in both residential and buy-to-let products. That's a great change and opens them up to more consumers. The Mortgage Works, they've made some ICR reductions. That's the calculation that they use to work out how much you can borrow based upon your rental income for both higher and lower rate taxpayers, as well as limited company applications, meaning that potentially you can borrow a bit more money with the Mortgage Works right now. So next up, let's have a look at the Halifax House Price Index that was released this week, covering February 2024. There will be a link to this document below, so you can go take a look at this yourself. I'm just going to cover off the main points. So first up, we can see average house price rose by 0.4% in February, the 5th monthly rise in a row. Property prices grew by 1.7% on an annual basis, slightly down from the 2.3% that we saw last month. A typical home in the UK now costs just under £292,000. It's about £1,000 more than it was last month. And Eastern England is seeing the most downward pressure on house prices. Kim Kinyard, a director at Halifax Mortgages, said UK house prices rose for the 5th consecutive month in February, up by 0.4%, or just over £1,000 in cash terms, with the average price now just under £292,000. On an annual basis, house prices are up 1.7%, higher than a year ago, and as I just said, slowing from 2.3% in the previous month. However, these figures do continue to suggest a relatively stable start to 2024 and align with other promising signs of increased housing activity, such as mortgage approvals. In fact, the average price tag of a home is now only around about £1,800 off the peak seen in June 2022. Now, whilst all that's good news for house prices, what happens next in the mortgage market still remains a little bit uncertain because we have seen lots of lenders increasing rates recently over a variety of concerns, and this is pushing affordability boundaries higher and higher, meaning that it's actually getting a bit more difficult to get a mortgage again. So whilst we've had a positive start, things are now on a bit of a bumpy road. So Kim Kinyard goes on to say, although lower mortgage rates alongside expectations of Bank of England interest rate cuts this year should help buyer confidence in the short term, the downward trend on rates is showing signs of fading. As I said, rates are going up at the moment. Even with growing wages, inflation falling back, raising a deposit and affording a sizable mortgage remains challenging, especially for those first-time buyers looking to join the property ladder. So it remains a possibility that there could be a slowdown in the housing market this year, and that's certainly the sort of thing that we're seeing at the moment on the ground. So it's vitally important that you do get the advice of a qualified broker, because if affordability and borrowing a certain amount of money is really important, then you do need to seek the advice of somebody that can look at the whole market, not just a restricted panel, because that way you're going to find out which lender will lend you the most money and meet your criteria, because from one lender to the next, the difference can be staggering. So a positive start to the housing market. Things are on a bit of a bumpy ride now, but we've got fingers crossed that things will improve later in the year, but there's no guarantees. So next we've got the spring budget. This is a huge document covering everything that was discussed in the spring budget this week. So I'm not going to go through all of it in detail. I will just cover off the key points. There is a link to this document in the notes section, so if you want to, please do go take a look yourself. So I don't know if any of you watched, but blimey, Jeremy Hunt knows how to go on and drag something out. That was an hour of my time wasted that I'm never ever going to get back, I'm afraid. But the key highlights were that the OBR have said that inflation is going to hit the 2% target very soon, within a matter of months. The key question is that going to stay there? Because there are signs that inflation may increase later in the year, which obviously we don't really want. Fuel duty is going to be frozen for the next 12 months. That's obviously going to help to keep inflation down. And alcohol duty has been frozen until 2025. That's also going to keep inflation down. And then perhaps it's Jeremy Hunt's way of saying, look, have a drink on me, everybody. Let's keep ourselves sane whilst we navigate ourselves through this tricky time. Tax breaks on holiday lets have been abolished from April 2025, and multiple dwellings relief is abolished from June 24. The big one was the national insurance cut by 2p from April for employed and 3p for self-employed, which was replacing the cut that was announced in the September budget. This means that we're all going to have a little bit more money in our pockets, but nothing significant, so don't go out and celebrate just yet. And lastly, there was also some child benefit changes and some capital gains tax changes, amongst other things, but those are the key things that are going to affect our pockets right now. Now, usually in the property market, we're hoping for some sort of incentive, perhaps something to help first-time buyers, maybe relieve a little bit of stamp duty for people that are downsizing. We all know the 1% deposit mortgage was scrapped a week or so ago. I did a video covering just that. So anyone that was waiting for something in the property market to help incentivize things, it's just not happening, I'm afraid. So if you're looking to buy, you're going to have to do it yourself. You're not going to get any help from the government. And so next, I just want to have a look at the Household Finance Review covering Q4 of 2023. This is a report that's been done by UK Finance. Again, link to the document below, so please do go take a look at it yourself. But the key points in this report suggest weak consumer spending in the latter half of 2023 due to volatile household confidence based on the uncertainty over the economic situation, which we are seeing right now. Mortgage borrowing was weak in Q4 of last year, just like the rest of the year, caused by upward pressure on mortgage rates, on mortgage affordability due to the cost of living crisis and the higher interest rate environment that we find ourselves in. Forward indicators suggest that there has been an uptick in lending in the first quarter of this year, which I just mentioned briefly, although it has started from a very low starting point. And notwithstanding this, we are expecting another challenging year for the mortgage market, again dominated by affordability constraints, as I've just mentioned when we look to the Halifax House Price Index. The rapid increase seen in borrowing over longer terms leveled off overall, but within this, the proportion of the longest terms is still increasing. Even with stretching to the maximum terms, however, affordability does look to be still out of the reach for many who would previously have been able to borrow more money. External remortgage activity was also weak, but internal product transfers, where affordability tests are not required, was the only area of growth in activity last year. So this is when you come to the end of your fixed rate, do you look at the whole market to give yourself more choice, or are you restricted where you can only stick with your existing lender? Because if you do that, no affordability, credit checks or anything are done, whereas if you move lender, it's like starting a whole new mortgage application. So product transfers, sticking with existing lenders has been the key thing that we've seen increase in activity over the last year, and it still looks to be the way forward at the moment. With cost and rate pressures continuing, households are drawing down on their savings to meet higher expenses. As yet, there is no sign that households are using credit cards or other more expensive unsecured credit to finance higher outgoing. Mortgage arrears rose for the 5th consecutive quarter in line with expectation. However, the level of arrears does remain very low by historic standards. Q1 is likely to show a lower increase, but we still expect continued pressure on mortgage payments throughout the rest of this year. And possession numbers were broadly unchanged in Q4 and remain at very low levels. With a backlog of historic cases now largely cleared, we do expect to return to more normal timelines for those people with arrears where possession is unfortunately the only available solution. Numbers are expected to remain low throughout this year and next, showing that actually a lot of people are able to fight their way through this challenging time and meet their mortgage payment. And so next, I'd like to take a look at the latest swap rate chart from yesterday evening. If we just take a look along the top here, the green box with the arrow pointing upward means that from the end of the previous day, so this was from the end of Wednesday, during the day on Thursday, there has been an uptick in swap rates across the whole range until you get to 15 years and 30 years. If we take a look at the swap rate chart, you can see the fluctuation, and this week there has been a slight increase, just a very slight increase on some of the swap rates there. And then if we scroll down slightly and take a look. So yesterday was the 7th of March, and you can see the previous days below here, 29th of Feb, 31st of Jan, so on and so forth. You can see that there's very little difference there, but they are higher than they were previously on the 2-year, and again, the same with the 5-year. So this is not great news for people that are looking to take out a mortgage, because it's the swap rates that kind of determine what the lender rates are going to be. So if swap rates are going up, lender rates are going up as well. We're obviously hoping that things improve with inflation and hope that the Bank of England are going to make their first cut in the base rate at some point this year. I think that's going to be the real kickstarting point to when we're going to start to see mortgage rates dropping and confidence improving in the housing market. But the Bank of England do keep saying we're going to have to expect interest rates to be higher for longer. And as I mentioned earlier, there is a possibility that although inflation is going to drop off below the 2% target, some expectations are that it could actually go up again in the second half of the year. So real uncertain times right now in the housing market, and it's important that you do get the advice of people and use videos like this to get a bit of a better understanding of what is going on the ground and the things that actually affect mortgages and the property market in the UK. So I hope you do find this useful. So that's all the key points that I wanted to cover this week. Thank you for watching and staying tuned. I do appreciate it. I appreciate you supporting the channel. If you're not already following, then please do follow. And if you're not already subscribed on YouTube, then please do subscribe. As you all know, this video is produced weekly on a Friday and gives you a roundup of everything that's happened the previous week. I do produce daily content on social media. So if you want to go follow me on Instagram, for example, at LodestoneMP, please do so, because I do produce content on there that gives you real up-to-date snapshots of things that are happening on a day-by-day basis, rather than having to wait for this weekly video, which is a summary of everything. So if you want hot off the press news, go give me a follow on Instagram. But as always, thanks for your support of the channel. I really do appreciate it. Anything that you'd like me to cover off or mention in future videos, please do let me know in the comments below. And as always, keep those comments coming, because I do like to interact with you, and I do like to get your views and thoughts on things that I cover in this video and other things that you feel are important. Have a great weekend, take care, and I'll see you next week.